Tests. 1, 2, 3. Hey, LP Trades. Sorry, folks. We have some technical difficulties today. Can you hear me okay? I can't come on. I won't be able to come on webcam. This is kind of what it shows when I'm on webcam. It's just a giant black screen. So I don't know what's going on here, but I don't have anything closed on my laptop, but so we'll just go screen today. You know, that's totally okay. Good evening, LP Trades. Hopefully you've been doing well. Infinitely, hi, how are you doing? Good evening. Sorry about the delay here. OBS had some weird update happen, and now I need to go figure out what the heck is going on here. And I'm trying to get some help with the OBS team, but at least we can still talk through what we're planning this week, and then I'll let you off, and then I'll go figure this out. So, okay, cool. So heavy duty. Good evening. Good to see you all here. So, yeah, I posted an update with where I've been. I've been slowly going back to 1 or 2 micros, just really focusing on really high probability plays, and it's been going well. This week is a really important week. We have on Wednesday a this whole week has a lot of high impact news. So you've got CPI. Let me make sure I'm on the right week here. So you've got on Monday, nothing like crazy. Let me filter this to just United States. Okay, cool. So this week, so we've got nothing on Monday, but you've got the S&P housing producers index. I think that's what it's called. What is it called? Housing price index. Sorry about that. And we've got JOLTS at 10 a.m. on Tuesday. So Tuesday's going to be a really fun day. Wednesday, you've got FOMC. So you've got a rate announcement on Wednesday. That's going to be a huge day, as well as ADP non-farm employment in the morning. And then Thursday, you have unemployment and ISM manufacturing PMI. So, and then Friday, you've got non-farm employment. So this is an absolutely insane week. Tons of volatility. You're going to want to be careful this week. This week, I've spoken about this in the past, but for everyone here, pay close attention to the new week opening gap this week. It's going to revert back to that many, many times. And particularly this week is going to revert to it and blow through it and then come back as well. So be careful this week. We've got a bit of a crazy week ahead of us. So let's in these kinds of weeks makes it really hard. The FOMC statement on Wednesday is going to be key. Okay. So oftentimes that's a 2-part move. So let's take a look at the charts though, and take a look, and let me pull over one of the larger charts here so we can see it all in one. So starting at the monthly, you can already see that the month of July was all the way up here, and in the span of the past week, we've dropped all the way down to here. That's where we're at right now. So let me make sure I'm actually logged into NinjaTrader as well. I think my data is not running. It's not running. Okay, good. Give me a moment here. My data has to catch back up. So we're gonna give this a little moment for my data to get in, and I will talk through that in a little bit. How's everyone's trading been? Do you guys catch any of that? Sell-off last week, and then the corresponding bounce at that weekly level we mentioned during last Sunday's call? I saw LP Trades, you got some of that. So yeah, so we can see it's kind of loading up here. So give me about a minute or two, and then it should be good. While we wait for that, had some good trades, but Friday was good game. Yeah, Friday was really, really tough. Not gonna lie, Friday was extremely difficult. That was one of the hardest days to trade I could have seen. Um, hopefully you were able to salvage some of it, but I definitely was fooling around a little bit and got chopped out on Friday. Oh no, Friday you went long at lunch and got wicked. Yeah, you had the right idea though, LP Trades. You have to commend yourself for that. Having the right idea was really important, right? So, we'll touch upon that particular day in a moment. Right now, we definitely see that there's continued movement higher on the indices, and once this, okay, great. So now we're at this monthly level here. We see that it's bounced up from almost. So this high on the monthly was 18,872.75 here, and then this low was 18,883. So 872, 883. Very, very close on a monthly perspective, and it bounced here. So I like seeing that, but I don't like that this is in a premium, so I don't consider this to be like a true order block. I guess it can be on the monthly, but on the weekly, we had always been mentioning that, hey, in the last week's candle, we were mentioning that it would expand down into this area, right? So what does that mean? Well, we have our IFTA ranges here as well, and we're going to get a new one once the new month starts. LP Trades, I played video games while watching at the morning rampage. Yeah, it was pretty rough. So right now we have a nice movement higher. If we take a look at, where's our new week opening? Let me grab our new week opening gap here. So I'm gonna draw this down over here, and I'm gonna go to the 1 minute chart real quick. We're gonna place our new week opening gap, okay? So we see that 1700, and then we see it change to 1801. So we can see that this last week ended here, right? And this week began right here. So this is our new week opening gap. We see we gapped up quite a bit. We're going to revisit this at some point this week, but you can see how quickly we've gapped up. So so this is our new week opening gap. These are going to be old, so I'm going to make sure these are gray. And then this is so we can see that only the new one's black. So we've started going higher this week, okay? Did we have very much of a wick down below? We did, but we didn't really go much further than that. So I would, on your charts this week, key levels, of course, key levels are going to be the midway point between this weekly wick and its base up here at that new week opening gap. And what we're going to do is we're going to swing grade, get the midpoint of that particular area here, and we're going to jot that down. So this tail that you have here, 50% is going to be important this week. So I want to make sure I grab that, mark it as a weekly line, and then mark it as a dashed line so I know that 19, what is this, 19028 is also a midpoint for the week. 19028 weekly tail consequent encroachment. So we're going to have that on our charts. What else do we have? We have this dynamic range, this dynamic sell side imbalance to reach for. We had already gone down into this weekly candle, and we did not close below the midpoint of this mean threshold of this bullish order block down here. What does that mean? So I'm expecting us to bounce a bit in the beginning of this. Let me get rid of this fib here now. So we have that weekly level charted. The low here is also important. This IPTA low here as well. And this low is a key intermediate term low. If we drop below that, even by a little bit, if we drop just by a little bit, then I'm not bearish. But if we displace below this week, that's when I'm going to be shifting my quarterly standpoint to be bearish. This is a intermediate term low. Go back to the 2022 content. ICT explains why that is an intermediate term low. It rebalances a fair value gap here, so it can be considered as one. And yeah, I think that counts. If we start to see us trade below it, we have the possibility of us going even further lower. But for the time being, I'm still macro bullish, and we're going to trade with that in mind. So let's look at the daily chart, right? So our daily chart is here. We can see that from low to high, we chased down to the 50% point of this whole swing. So this previous short intermediate term high, this previous intermediate term low, this swing took out that low. So this makes it this dealing range. And this swing took out that high and never made other smaller highs. Essentially, we kept on making intermediate term highs that are higher until this point here, right? So we've started to make some lower short-term highs, but this is our dealing range. So we've come down to 50% and well below 50%, and we've actually rebalanced a high probability order block, bullish order block here, below our 50% equilibrium, right? So this means that this part of the daily candle here was a high probability fair value gap coupled with bullish order block. So I'm looking for us to continue higher, at the very least targeting this daily sell side imbalance first and foremost. If we take a look at this from a different angle, if we were expecting things to be bearish, we would look for the first fair value gap or bearish order blocks above the discount of this entire range. Now, we haven't gotten there yet. We have this fair value gap that's in a discount. This one, I think, is a draw, and it could have us continue higher. So I'm watching to see, one, do we continue reaching higher up into this area and reach up into this daily sell side imbalance or not. So that's something that I'm looking for in the beginning of the week. But once it gets to FOMC, I have no idea what range it's going to go, because it really, really depends on what percentage the FOMC rates. If they decide to cut rates, then that's going to be really interesting. Typically, you see markets rebound quite a bit if you hear of a rate cut. If things remain the same and inflation goes up, we're in for some further downside. So I think that this is going to be really key to really, really pay attention to the economic events this particular week. CPI comes on Thursday, or sorry, on where is it? PMI comes on Thursday, and we do have Chicago PMI. We do have that kind of stuff here, but we definitely need to pay attention to these economic events because they will cause some damage this week. So I expect, at least from a weekly perspective, I am expecting us to continue higher up into this previous buy side imbalance. If we can close this whole range, then we might see a rejection off that high point around 650. 19,650 is going to be a really interesting level, especially if we can get to a close up and around that area. Because if I were to see that, I might consider looking for evidence of us immediately rebalancing off of this balanced price range now. Okay? So from a daily perspective, it's doing exactly what we would expect. A little bit of a bounce here. We do see there's outstanding liquidity waiting down here as well. So I'm thinking we head higher before we head lower. If the numbers all look poor for the economy. Okay, so from a higher time frame perspective, we came down, we took out this buy side area, right? And then we displaced lower, continued to displace lower, and we kind of treat this as a breakaway gap, treat this as a fair value gap in the lower quadrant. If it's very bearish, then we'll see it drop at 650 or lower, and then continue aiming for IPTA 20-day IPTA low, the low at 18,506, 40-day IPTA low, and all these areas to engage. Hey, what's up, Jay Whitway? How you doing, brother? Hope you've been well. Hope you caught some really nice shorts. I know you were a shorts guy, so this past week must have been amazing for the first Tuesday, Wednesday, at least. So yeah, I'm still expecting, like, I don't see the weekly candle becoming bearish just yet. I needed to close, and I see that it came down to the midpoint of this down close candle on the weekly chart, and then it bounced. So it really depends on if this is a green higher beginning of the week and then red after FOMC and beyond. It really depends on what the rate is going to be, what the rate announcement is going to be. Okay, so let's go down to a 4-hour chart next. So this is our 4-hour chart. You see the orange weekly levels. You see that weekly wick that we traded down to. So this price action, we're going to zoom in on this a little bit. So this price action was pretty brutal on Friday, right? So right now you've got quite a push in Asia session to reach, they reached a 4-hour rejection block here. When we go look down at the 15-minute, we can see that we actually came up into this fair value gap area as well. Okay. So since things are fractal, if overall people are looking to keep the, keep the price moving upwards, then they're going to support it. But we should see movements lower during a week where it's going to expand higher. This time we have a movement higher in the beginning of the week, so I'm more inclined to think that we're going to go lower, but it's hard to tell. Johnny Lee Lin, are September rate cuts propaganda or likely? I don't know. Some people think that July rate cuts could happen, and if that's the case, we're going to go to the moon. But the administration has said that they want 2 rate cuts. I have to look to see if there's any other quantitative easing involved right now. All of the Treasury liquidity supports are gone, at least for now. So I don't know what's going to happen here. I mean, it's possible that it sells off. It's too early to tell. But if this continues to have a difficult time reaching above old levels, then I think that we'll see some further move lower, either during the second stage of FOMC, or maybe unemployment, or maybe CPI, or whatever, whichever one's on Friday. Was it non-farm payroll? That's it. Yeah. So Infinitely says September likely, I hear. July will be OMG for small caps, but unlikely. Yep, I agree. LP trades, I don't know. None of the FOMC members said they could guarantee 2 rate cuts. It's very possible. Yeah. I don't know how they do it within this administration, but I think it also depends on a few different economic factors, right? So we've got CPI. We don't know. It's gone down quite a bit since our previous calculations. So I don't know. Yeah, it's a really good question. I don't know if they're going to have 2 rate cuts, but either way, we're going to trade it. Whenever there's a rate cut, that means you're going to make the cost of borrowing a little bit cheaper. So you're going to have higher inflows into markets if that's the case. Cool. So that's it on the 4-hour chart. You see that we rocketed up already. From Asia session, you can kind of see that once we got to 6:15 basically, or 6 o'clock, we've done nothing but aim for the liquidity, which was waiting all since we last talked about this. I do see some liquidity down here. Do I think that it could get there as well? Yes. But there's also this liquidity up here too, right? There's relative equal highs up here. So I feel like, if anything, this weekly candle low combined with this over here, this buy side liquidity, I think it could make a run for it. Yeah, I think it could. Infinitely, they want to not cut, but have to cut once. Yeah, right. Exactly. Infinitely said they would cut once per year. Yeah, it's either they do it before elections or they do it in December. If they do it in July, it's going to be absolutely nuts. I agree. Okay, cool. So anyways, so what you want to do is you want to pay very close attention to those buy-side liquidity areas. So as you can kind of see here, you can see that we've already started to reach up into this area of liquidity. We've taken buy-side, but failed to take sell-side with any fervor. So if you are able to, this particular week is going to be one where you want to pay attention to this return to new week opening gap, okay? Because it's likely going to end up there before FOMC and for not just FOMC, but for whatchamacallit, the non-farm payroll. Okay? So I like to have that out. I like this as a draw on liquidity next. If this rejects from here, I could see us building something where we end up going like this down into the buy side imbalance formed during the new week opening gap. And they could either drop it super hard here and run all these stops down here, or they can, you know, try something different. But that's what I think when I think of what's going to happen during this week with FOMC and non-farm payroll. Let's see, what did they say they would? They might said we could likely see a rate cut if they seem. Oh, nope. When did they say they would? They might say we could likely see a rate cut. We keep seeing what we need to see. Yeah, I think months ago, yeah, that's true. There was something that they had mentioned that they're looking for a rate cut, but their goal of 2% of change in inflation, which is what CPI is, I don't know if they're going to hit that goal. I think 3% is probably going to be the new low. So, yeah. So I think that this could, maybe this heads a little bit higher, takes this out first. But I could definitely see now that we've taken this, I can see us trading all the way down back to the new week opening gap and then potentially using it when needed. So, So yeah, I'm expecting find every single form of liquidity that you have on the 4-hour chart that's a intermediate term high of some sorts, and mark that out on your charts as well, so you know where are the key important levels, you know. And I think that is going to be it for this week. We understand again that we could reach up into 19,420 area. I feel like that's going to be a really key level, and maybe the midpoint of that as well, 19,550. I don't know if it's going to bounce all the way up today, but there are definitely going to be days that are worse than others. So I think the expansion higher in the beginning of the week makes the most sense, though. So that's what I'm going to be targeting this week. I'm going to be targeting those. I'm going to looking for. I actually took a trade on Trade of 8 today and was a bit short too early, so I had to close it. And yeah, I mean, it's all right. So again, I'm gonna be looking for these internal range liquidities to be marked before agents are. Okay. All right, well, I am getting very tired today. I need to actually catch up on sleep. But if there's any questions, just drop them in the chat and I'll try to get to them. Hopefully you all can get some good rest. And yeah. Are there any questions for me before I close up for today? Any questions on the market? Awesome, infinitely. Thank you. No, thank you for joining. I appreciate being here. I miss doing the live streams, I'll be honest. But I knew I had to, something was wrong. I knew I had to go recuperate. So I will not be streaming for a while. But for everyone here, I haven't blown the PA accounts. They're still alive, but they work very, very close. So slowly but surely getting these back up. I aim to keep them, and I also aim to build out maybe 3 or 4 other 300K accounts so I can size up on those. I think there's the offer that goes on until tonight. Oh no, tomorrow, until July 31st. There's the offer to buy at 80% off, and then you can pass those by August 15th for the larger accounts, and you can always pay $80 for the lifetime fee. I'm doing a few of those right now. Heavy Duty, great review. Thanks. Gonna try not to get chopped this week. Let's actually, you know what? Let's take a look at what Friday looked like, by the way. So let's take a look at that. So so this is Friday here, the 25th, right? This is all Friday's crazy price action. One thing that I want to point out here for everyone who's an ICT trader, this was clear as day, but I missed it because I wasn't looking at it. So the first thing that we should have seen from this Asia session, right, started right around here, was above here we had relative equal highs, right? Jonathan Sung, Seek and Destroy Friday. It was on the lower time frames, but if you take a look on the higher time frames, it actually made a lot of sense. And I'll explain why. I'll show you why. So on the 60-minute chart, I couldn't really see much. On the 4-hour chart, I really couldn't see too much either. So I had to go down to a 15-minute chart. So during Asia, we saw this here, right? Relative equal highs, so bullish bias would have been there. We don't know if this is going to be important at the time, so we probably would have marked this one instead. But during London, we did see that there's a short-term low here and that London took it right at 215. London takes that low. So sell side liquidity was taken briefly. It jettisons upwards, and we continue higher during the entire London session. But what happens exactly, right? What happens? We see relative equal highs here. We see that we almost got there, but we're starting to reject. So what does that mean? Well, that means that we're engineering highs and buy side liquidity so that we can rip through it later. So we get to about 7 a.m. We see that there's a fair value gap to potentially go down into, and then we end up taking that buy side liquidity right there. We take it again up here, and the day starts. So what happens here? Well, we come down and we end up taking out what? None other than sell side liquidity here. Both of these get taken out at some point. And you see this cyan line is the midnight opening price here. Look at what happens when you get 2 or 3 close proximity sell side limits taken, wicked through, taken, wicked through, taken, wicked through, taken, wicked through. This should have given us an idea, especially since its shorts have won this entire week. Shorts have won, right? So if shorts have won, then we can probably accept and expect that the long side is going to be next. So what happens? This new high is made. We see displacement lower. We see institutional order flow entry drill lower. We create these lows here, and that's it, right? That's the end of the day. It was absolutely a seek and destroy Friday if you didn't know what you were looking for, right? But at the end of the day, if you know where your draw on liquidity is, you could enter essentially anywhere. You just have to make sure you're managing your risk the best, and you have to manage your FOMO as well. So yeah, I think that likewise on the sell side, notice how relative equal lows got attacked during that afternoon, that 10 a.m. session. The Asia short-term lows got attacked during that session. The only thing that didn't get attacked is the one further down here. That was close enough to the initial balance range that I didn't really mark it. So, yeah, I mean, this alone saved me during a scalping style environment. At the end of a day where people are confused whether or not to continue the trend or to stop the trend for the time being. So yeah, I think that was very clinical in retrospect, but I definitely got chopped out because I was looking at lower time frames. Jonathan Sung, I understand it to be a run to relieve the longs. Need to see some shorts covering. Yeah, I could see that. Yeah, you need to see displacement from the longs. I agree. And what we see here is a fairly convincing movement up here where we've tied these people with others unlike them. You can kind of see all these blue lines are goals. So, and then they're buy side goals. So, yeah, I mean, that's how I'm gonna propose it today. Is really be careful. Look for your breakers. Look for your indications that state that it was obvious. And yeah, I think that's it finally. So again, thank you everybody for joining today. Be careful this week. It is a packed week. I think Monday we're not going to get very good movement. So be wary of Monday, okay? be very wary of Monday. I don't know what's going to happen during that time. There's something happening there. I just don't know. Okay. Yep, trapped. Okay, folks. Well, there's no other questions, then I suppose I can give you guys some time back, okay? Hit those charts up. I will not be streaming online, of course, as expected, but I'll be thinking and watching the charts ever so diligently as I can. So, have a great night to you too, Jonathan, and everyone here. To everyone here, have a good night as well. Get some rest, and we will see what we can find this week. Have a great one, everybody. Sorry about the webcam. I'll try and get that fixed, but have a great night. Take care, all.